let's talk a little bit more about AMC, GME, the apes, the ape movement. Day trader army loses all the money it made in the meme stock era, according to Bloomberg. Diamond hands mentality fuels dip buying and now faces a test. Capitulation from the crowd may help signal a market bottom. Nursing losses in 2022 that are worse than the rest of the markets, amateur investors who jumped in when the lockdown began have given back all of their once prodigious gains. That's a good SAT word of the day. Now, have some people given back all of their gains? Yes. But I would argue not all, because I think even though they're calling it amateur investors just because they're not professionals, like it's not their professional job, I think there's actually some standout stories of investors, amateur investors as they refer to it, who over the past year and a half have learned about the market. And I would be willing to bet that a lot of them are still diamond handing their AMC and GME, and maybe in the same line as me, think of that as a symbolic investment in the fight for market transparency and fairness, but in doing so have also learned about the other aspects of the market and are currently net profitable because they learned that they could play the market to the downside. Diamond handing their AMC and GME or whatever else is their core investment that they like, but in the meantime, looking for either the overall market or companies that they don't really necessarily agree with, might think they have a high evaluation, and right now are net profitable, even though they're still in their, what this article would say, of their diamond-handed position. What I don't like about this is the way they're splicing the data. It makes it seem like amateur investors are a complete monolith and everyone has gone in, are exclusively in AMC and GME, and pretend that nothing else in the market exists whatsoever. And just from, I guess, my own anecdotal evidence, I don't think that's true at all. I think so many people are learning way more about not only the equities market, but also the crypto market, and are becoming better at playing it, now still sitting in a net positive position. Like I said, I think this is an unfair way to break down the data. A lot of these guys started trading right around COVID, so their only investing experience was whacked out Fed-fueled markets. That's fair. Basically, from March of 2020 going forward, like you just had the Fed putting almost $9 trillion in. They were backstopping everything. And that's why we saw just such a crazy rip to the high heavens. That all changed when the Fed pivoted in November, but they didn't realize that because they've never seen a market that wasn't supported by the Fed. The results have been horrific. Now, this in my, active trading career is the first time that I've seen a massive switch from quantitative easing to quantitative tightening. I'm in no way saying, oh, I've lived through this all before, I know what's going on. No, I have the ability to read about what happened historically, but I do think there's a fair argument that it's a bit different to live it in real time. But understand, on January 5th of 2022, everything changed. When it came out that, hey, not only are we not going to be buying anymore, we're going to be undoing it. We're switching from quantitative easing to quantitative tightening. And the TLDR, this is why you don't fight the Fed. Now, obviously, this will eventually end. That's just, they're not going to continue to be so hawkish. They're not going to continue to be doing their balance sheet normalization, their balance sheet runoff. But right now, it is what we're dealing with. And the name of the game is identify the trend. And the way this is particularly speaking about retail traders, apes, amateur investors as they talk about it, I think it's a little bit belittling because there's a lot of people who are just doing it for themselves who are crushing it right now because of how much they have learned. Coming back to this monolith thing, I just don't think it's right. And they even throw it out there that they're like, hey, the crowd's a bit crazy. Maybe you shouldn't discount them. Could the DIY crowd bounce back? Yes. People have been foretelling the death of the 2020 vintage retail investors since the moment they surfaced. Past reports of their demise were exaggerated. Armed with zero commission trading accounts, individual investors have managed to will their favorite stocks back from the brink of multiple times and may be able to do it again. So even the author of this article is saying, hey, the one thing we've seen in the past is you cannot appropriately or accurately predict what the day trading army is going to end up doing, which I think that's actually, in this article, a pretty level-head view and opinion of what's going on with the retail trading revolution.